For most people around the world, the second biggest financial purchase is likely going to be their car, and it's no different in Malaysia. In this particular video, we're going to see whether the car market in Malaysia is actually growing and if there's still potential in them. And we're going to look at this particular company called Bermaz Auto. The reason that prompted me to look at this company are actually two things. One is the SST exemption that the Malaysian government used to actually spur the growth of the recovery of the automobile sector in Malaysia. And the second thing is actually the strengthening of the ringgit towards the Japanese yen, in which Bermaz Auto imports a lot of Japanese car, this marquee called Mazda. So this particular video is by no means it's a buy or sell recommendation. As a disclaimer, I do not own any Bermaz Auto shares, and more importantly, it is for your educational purposes only, and do speak to a licensed fund manager if you do require license advice. First off, I'm going to share a very interesting article or research done by Professor Dr. Kulantayan of University Putra Malaysia. He actually went to look at the number of vehicles registered versus the growth of the human population in Malaysia. And he discovered that from 2019 to 2021, the Malaysian human population was 32.5 million in 2019, and it increased roughly about 300 to 400,000 annually, bringing it to about 32.6 million in 2021. However, for the vehicle population, in 2019 it was 31.2 million, and it increased by 1 million a year every year. And subsequently, in 2021, the registered vehicles in Malaysia grew to 33.3 million. So the vehicle population has actually surpassed the human population in Malaysia. So he said, in 2021, for the first time ever, the vehicle population actually outpaced the human population. And prior to this, it has always been the reverse. So it goes to show how there are actually less babies, but more vehicles coming out to Malaysia. And I think that's one of the reasons why he attributed one of the reasons why the Greater Klang Valley has more and more jams is because of this increase in vehicle population. So while you can't do anything about the jam, how do you profit from this growth of car population to your benefit as an investor? For you to track the number of vehicles, new and old, total registered in Malaysia, you should be looking at this thing called TIV, or Total Industry Volume. Now, the custodian of this data is MAA, or the Malaysian Automotive Association. They do publish a number that tracks the growth month on month, and according to my friends who are in the vehicle or car industry, there are some cheeky foreign brands or marquees that actually do not divulge this data, so there's some discrepancy in the total volume being showed here. Overall, as a trend, we can see that year on year it seems to be a little bit of a decline. However, month on month, this is where it gets interesting. The Malaysian economy really opened up on the 1st of April. However, prior to that, the government did introduce a tax exemption, SST tax exemption, for new vehicles bought before July this year. I think it ended in June, if I'm not mistaken. Yeah, so even before that, before the economy actually opened on the 1st of April, you see that vehicle car sales actually jumped to about 72,000 in the month of March. And after that, it did have a decline, but it did climb up in June before the thing ended in July. That's why you see that the second peak was actually 62,000 in June, before the exemption ended in July. And certain marquee brands or distributors, they actually subsidize the SST by half. So instead of a full 100% SST exemption, certain distributorships like Mazda, which is under Bermaz Auto, they actually subsidize by 50% to keep the sales momentum going. So who does Bermaz Auto actually distribute for? They are actually established in Malaysia and the Philippines. They do own quite a substantial stake, about 61% of distributorship business in the Philippines. And their three key marquee brands are actually Mazda, Peugeot, and actually Kia. So a Japanese, a French, and also a Korean. They're very strong with the Mazda brand. Literally grew it from a very, very low base to where it is today. And I am a proud owner of a CX-5, 7 years and running, never given me a huge problem. The only thing I need to change is wear and tear. So I'm kind of vested in this company through my vehicle ownership of a Mazda. As mentioned earlier, their growth has been nothing but stellar, and you can see 2009 they started off with a base of 886 units, right? And for the financial year 2019, I think the peak volume was actually about 15,800 vehicles a year, which is quite substantial. For a foreign marquee, yes, they do have completely knocked down or CKD units in Malaysia, but they have to fight against the likes of the Toyotas, the Hondas, and the other brands that have long established history within Malaysia. Their 13-year CAGR growth for the number of units is actually 23.2%, which is pretty impressive. 2021, even with the COVID, I think you can see the impacts of COVID hitting. 2020, they still sold cars, 9,000 over cars in a year. But you can see the recovery coming up in 2021 and 2022. I think for this year, this is just the first quarter they managed to sell already about 4,000. So if they do consistently hit these numbers, I think they will definitely being close, if not exceed that of their pre-pandemic sales volume in 2019 actually. A little bit more breakdown in terms of details. This is something I pulled off of the Maybank Investment Bank research. They did a projection that in 2025, Mazda Malaysia would be selling roughly about 15,000 vehicles, and Mazda Philippines, in which they own 60%, Bermaz Auto, will be selling about 2,400 vehicles. And if you can see the model that they built, they actually projected a stagnant growth, 2023, 2024, 2025, stagnant growth. I think it's good to be a little bit more pessimistic in which, when you are projecting a future prospects or model. Where it's interesting is that they feel that this analyst actually feels that Kia has much better room to grow. 2022, 360 vehicles, and in 2025 they expect to see 20 times. I guess this is from a very low base, and I think Kia has quite an interesting proposition. They're being very aggressive in terms of pricing, feature sets, and last but not least, Peugeot. I used to pronounce them as Peugeot, but actually apparently the correct pronunciation is Peugeot. 55% ownership, and Maybank forecast them to sell about 2,600 vehicles in 2025. So there you go, the breakdown of where he thinks Bermaz is going to go in terms of total units being sold for each marquee. Let's now look at the finances of Bermaz, and as you can see, it's quite well run, even though revenue has been, a bit of a yo-yo, and I'm pretty sure they were impacted by COVID. 2020, you can see the drop in sales by almost 700 million, right? But on a net profit basis or net income basis and cash flow from operations, the only year they suffered negative cash flow from operations was in 2020. I didn't see a huge layoff from their staff. I'm pretty sure they kept most of them. They just kept the engine humming, and kudos to them. 2021, they see a recovery, 455 million, and in 2022, 293 million. So the CEO of Bermaz Auto actually said it was a good lifeline to the car industry, because the government, on top of the moratorium for the housing loans, they also gave an SST exemption, in which prompted my interest, because I wanted to see, once the exemption was removed in July this year, whether the vehicle sales will still sustain itself. That was probably just a Kickstarter to help the industry just get back on its feet. And more importantly, is the appetite for vehicles in Malaysia still going strong? That was where, when I was searching around and I looked at the numbers for Bermaz, besides this other company, MBMR, actually piqued my interest actually. Are there risks involved if you were to invest in Bermaz Auto? Definitely they are, and these are the four main ones that I can think of. First one is actually forex risk. Right now, it's playing to Bermaz Auto's advantage because the yen is weakening against the ringgit, but that really depends on other macroeconomic indicators or catalysts. And if the yen does strengthen against the ringgit, then they would be at a disadvantage because a lot of their parts, especially for the Mazda vehicle, actually comes from Japan, or the OEMs that serve them are actually manufactured either in Japan or in Thailand, in Rayong. But Forex does play a major role in actually their bottom line and their top line. The second risk I see is actually any one of the marquee brands pulling out the distributorship rights given to Bermaz today. But based on what I see, that probability is very, very low because Bermaz has done a great job in growing the Mazda brand in Malaysia. It definitely helped with the launch of the CX-5 because that's the most popular selling model in Malaysia. And for Peugeot and Kia, Peugeot, if I'm not mistaken, used to be distributed by Auto, and it did not really fare well. I guess they're giving Bermaz a try, and based on the track record of the management growing Mazda, I'm pretty sure they can do a pretty decent job at selling Peugeot and Kia cars. The third risk I see is actually the easing up of the supply chain, and for some of you who are invested and in the invested and know very well the automotive industry, you would have known that the supply chain issue really caused a disruption. Cars were delayed. A lot of electronic components had to be either change their supplier source because they couldn't get the parts in time. And I think based on what we see today, I think that supply chain bottleneck has actually eased. But going forward in the future, I think it's a good lesson learned for any car manufacturer to actually, not concentrate all of their suppliers to those few. I think they would have distributed their supplier base to a much wider base so that there's no single point failure this time around. So it kind of like COVID was the wake-up call for them. Last but not least is actually the SST exemption and the pullback of it. It was just a kickstart to help rejuvenate the automotive industry. And with the removal of the SST exemption, I just wanted to see whether that growth will still continue, the vehicle car sales growth will still continue. And does Malaysians still have an appetite, even if they had to pay the 6% SST? Yeah, I think they will. But let's see how going forward, whether the buying power, purchasing power of Malaysians will still continue to grow. So there you go, my quick thoughts on Bermaz Auto and the automotive industry in Malaysia in general. Three main key takeaways. I think well-run company, finances are in good shape. Secondly, I think the car is still a milestone purchase for most individuals, especially as they have better income, they climb up the corporate ladder, and it's like, just as an achievement that you can buy a better car. You buy, you start out with a local brand, and once you've kind of arrived, you buy a foreign marquee brand. That's something like a status symbol that you can't take that away from the typical human nature anyway around the world. The third thing, and I think it's very important for Bermaz, is that it takes time to grow a car brand, especially a foreign marquee. I think Japanese cars, like the Toyotas and Hondas, most of them are purchased because they are practical, functional, reliable. If you want to buy like a foreign marquee like a BMW or a Mercedes, is very well known to like not be as reliable as the Japanese cars. And I think that's going to be somewhat of an uphill battle for Bermaz when they start selling Peugeots as well as the Kias, because the Korean marquees and the French marquees are not very as well known for reliability as the Japanese cars. So it's going to take time, and more importantly, that actually brings us to it as a business, the maintenance of margins, because in the car industry, the margins are so razor thin. And to determine whether a company is well run, if you benchmark them against like the likes of the Ford, the Volkswagens, I'm talking about general cars. I don't compare them with the Ferraris of this world. The margins is where you see whether the company is well run, and they are right up there. I've not done a detailed analysis of all these margins, but my quick overview is that they're quite up there with the other big brands like Hyundai, Ford, and as well as even the Toyotas. So there you go. Hopefully this video has brought value to you, and if it did, please consider subscribing, give me a like, and if you want to know when the next videos are out, hit that notification bell, and I'll see you in the next video, guys. Bye bye.